Today.
Okay, great. So, hello and welcome to my series Ask an Angel, where we discuss topics related to the world of startups, entrepreneurs, and investing. I'm your host, Jonathan Hung, and on today's episode, I'm joined by my great friend, Buck Jordan. Hey, Buck, how are you?
Hey, John. Great to be here.
Yeah, love to do a little intro about you. So, Buck Jordan is the founder and CEO of Wavemaker Labs, a corporate innovation venture studio. He's also partner at Wavemaker Partners, a cross-border venture capital firm with dual headquarters in Los Angeles and Singapore, and one of the most active early-stage investors in Southern California and Southeast Asia. In addition, Buck is the president and co-founder and chairman of Miso Robotics. Previously, he founded Canyon Creek Capital and served as a captain and Black Hawk pilot in the California Army National Guard. Thanks so much for being here, Buck.
No, my pleasure, man.
So let's get into it. Like, how'd you get into investing? I know we met a long time ago in 2012, and you started that. I know you went to UCLA, got your MBA, but like, what made you go into venture capital investing?
I was just fascinated by the amount of enterprise value that was being created, and the fact that venture is the highest performing asset class of any of the asset classes, and but at the same time, the bulk of people just don't have access to it. They don't have access to it because it's very difficult to get into the deal flow. It's very difficult to get access to good deals. And I thought that was a fascinating place to be and build a career. And so I started a venture fund in 2012. And thank you for backing me, John. You were an incredible investor. It's been a ride.
No, it's great. I tell everybody I started my first venture capital investment, first angel check with Buck. We met over there in Santa Monica, at Huckleberry. I think it's still there. It's just like, I don't even think you thought I was going to invest. I think you thought like, oh, you're just pitching me. And I was like, okay, I'll do it. I was just like, hey, whatever. What's this company? Gift? What's Gift? And we killed it. And we made money in 10 months. Amazing.
That's crazy. That's
so.
Why venture capital is driven by these long tail returns, with you only pick winners, I guess, John. But most of us need to get a portfolio together.
I wish. No, I've had my fair share of losses, no question, and that's the nature of the game. I mean, like, listen, if you hit over 300, 3 out of 10, you go to the Hall of Fame for baseball. Right. I mean, basketball, you probably have to shoot 50%, but you're still missing more than you're making. So I love to get into how do you usually find your investments? Everyone talks about deal flow and everyone's is different. How do you get the pipeline as an investor? When you were investing in versus now where you're building.
Yeah. I mean, deal flow is everything, You can't diligence a bad deal into being a good deal. It doesn't matter how good your diligence is. If you don't have access to the good deals, you're just not going to win.
Mm-hmm.
And this is the biggest challenge with I think any angel investor that they have to contend with, and that is there's a tremendous amount of adverse selection, happening in the system. And roughly speaking, how deals kind of live their life. The first place they go is the venture capital firms, because everyone wants to get funded by Andreessen or some other name, and so they go to tier 1 VCs, then they go to the tier 2 VCs, and then they go to other people, right? And so at each level, the cream of the crop is being skimmed from the pool, right? And you're left with a less investments that are not as attractive. And then I would say after the VCs, they go to super angels or strategics, guys who might have really relevant experience to the company or to the industry, and super angels who are writing 500K checks, right? Then they go to cat and dog angels or angel funds. And then of course there's this new issue, new asset class called crowdfunding that's coming in and kind of disrupting the whole thing a little bit. But really as an angel investor, your one primary goal is to mitigate the effects of adverse selection on you. And so you got to find a way to get up the stack before the good companies are gone.
Yeah, absolutely. And speaking of that, I mean, you said you've compared venture capitalists and angel investing as a funnel. How do you work your way up this funnel?
I mean,
for the regular investor who's trying to get up.
Yeah, I mean, unfortunately, it takes a lot of time and a lot of work. There's a reason why VCs charge 2 and 20, and frankly, that's a bargain for not having to do that work yourself. So first of all, I think
Yeah.
you gotta make yourself useful to other sources of deal flow, which are often other VCs. So if you can be like if you could get in with a
Mm-hmm.
VC and kind of draft off his deal flow, that's really valuable. If you can if you can afford to make a few LP investments in other funds, that can be a really nice trusted
Mm-hmm.
source of deal flow because all of a sudden, if you invest with a VC, you guys are brothers now, right? And so it's a great way for you to
Yep.
lend over the top and make individual angel investments, which is what's fun. But the most powerful way I think to kind of avoid this adverse selection is by not by sitting back and waiting for the deals to come to you, but by having a thesis-driven
Mm-hmm.
approach with how are you going to source your deals. So you should have a thesis. I mean, like I have a thesis, for instance, that food and robotics are going to be a massive win for the restaurant space. I think that restaurants are going to have to be digitally native and going to have to increasingly become more and more
Mm-hmm.
automated because cost of labor is going up and labor availability is going down. And so with a thesis like that, you've all of a sudden got like a huge industry, food robotics or food tech, that is narrow enough for you to start narrowing down your kind of universe of opportunities. And so if you do research around your
Mm-hmm.
thesis, you'll come up with a dozen or so companies that will be interesting. And then I think it's your job to reach out to them and become known to them as the first check that they might go out to. So that way you kind of get out of this adverse selection loop if you can do that. But it takes work.
Yeah, absolutely. And you know what, everybody, like, yeah, absolutely. And, I was lucky. The work I did was I got to become friends with you, Buck, and it's great. And, I remember in years back, we talked about a company, called Miso Robotics. And I remember it wasn't even a pitch deck. And you just told me it was 4 PhD students from Caltech who want money to build a hamburger making robot. That's all you said. And I'm like, okay. I mean, that was pretty easy. I mean, I had no diligence back then. I was just like, sure, why not? Pew, pew, let's do it. So let's talk about from where that was. Yep. So let's talk. I mean, hey, if Wax Invest was there back then, I would have used it. But I'd love to hear, what is Wax Invest and why is it useful for an angel investor?
Yeah, so increasingly crowdfunding is becoming a more and more great way to make investments. Because there's real dollars flowing through the crowdfunding pipes now, and so there are deals that are just
Mm-hmm.
sidestepping the entire venture ecosystem and cutting out the middleman, which is the GP
Yep.
C fund, and just
Yep.
going direct to people. And so Miso Robotics is a perfect example of that. Their last day of crowdfunding is today. After today, they'll probably have raised $80 million through the crowd. Average check
Wow.
$3,000. This is a total sea change
Yeah.
in the industry. And so
Mm-hmm.
what I would
Mm-hmm.
encourage people looking to invest in crowdfunding, especially angel investors, you should absolutely be on the platforms. You should go to Wax Invest. You should go to some of the other platforms and really monitor the companies that have traction and that are interesting to you, because it's a really efficient way for you to source deals. Because if you can't tell, the analog way of getting through the adverse selection is really time consuming, and crowdfunding is just a really efficient, great way to do it.
No, absolutely. I mean, I'm just curious, right now you're more of a builder than you are an investor, but which is great. And I love that. So I love to ask you, how's that shift been for you? How do you still how is it different putting your investor hat on versus your builder hat?
I love it. I mean, being an investor, or sorry, being an investor, you have a relatively limited set of tools with which to operate on. Like you can make investments, and yeah, they can be convertible notes or price, but whatever. But if you're if you're
Mm-hmm.
owning a company, if you're an entrepreneur, well, all of a sudden you're able to buy companies, fund investments with revenue. You're able to start companies from scratch, and if you can access the capital markets efficiently, then you can potentially do this at scale. And so what I'm doing at Wavemaker Labs is really a mix between a
Mm-hmm.
venture fund and an entrepreneur. We're really trying to scale entrepreneurship. We start companies from scratch. We don't take pitches. We do take problems from corporations. One of the things that
Mm-hmm.
we're trying to do at Wavemaker Labs is really mitigate the two biggest problems in venture. And I would argue that the two biggest problems or risks with venture investing are market risk. Does anybody want to buy this product? And execution risk. Can this team actually deliver? And so, we mitigate both those two things by, one, starting with a major customer signed on from day one. We'll work with, people like Yum, Chipotle, Cargill, you name it. We'll get them signed on, get them to be part of the category.
Right.
So they're incentivized and you're aligned. And then, that market risk question, pretty much taken care of, right? You got a big gorilla on your back. The second thing is execution. And so we build every company with our own team, and we centralize technology development. And so, so the team is, you fix the team over time to make sure that you can execute. And then basically we also do a really interesting thing where we're able to build a tech stack on the back end that can be shared across all the companies. So one of the interesting things we're doing is, well, let me back up. I would argue that if you got, John, CTOs, every one of the companies you've invested in, and got them all to trade notes on what they're working on and what they're spending development money on, you'd find that 25 to 30% of all their costs is building the exact same thing in every single company. Cloud architecture, control systems, whatever it is. Right. And so by centralizing things, you can do away with that waste. And by centralizing things in an industry, food, and discipline, robotics, you can probably get more like 40% overlap, which really brings a lot of efficiency to our business. Anyway, so I'm having a ball building versus investing. It's more control.
Yeah, no, absolutely. And so speaking of that, like, how many companies do you try to have at any one time? What can you put on your plate?
Yeah, I mean, we're always biting off a little bit more than we can chew, John, because it's just how I'm built, I think. But we have almost 10 companies that we're building at the moment. But we have a team of about 200 people, mostly engineers. So we're a big boy company. We can handle, we can walk and chew bubble gum at the same time. But we're definitely building a lot. We're building everything from a pizza robot called Paistro. We're building something that does bowl-based dishes called Nami, and Nami's in partnership with Chef Morimoto, which is an Iron Chef, and partnership with a big corporate partner, SPEC3. We're building a boba machine. We're building a robotic lawnmower. We're building a robotic coffee shop. We're building autonomous dishwashing. Miso Robotics, of course, is doing frying. So we're really taking a disciplined approach to tackle the biggest problems in the food industry. Our mission is to automate the supply chain of food from seed to fork, with the outcome being higher quality food, less cost to the masses. And practically speaking, what that means is that we are taking the highest consumption food categories in the United States and automating them.
No, it's wonderful. You've done a tremendous amount of work, and I think it's great. Like, you're definitely a thought leader in this space, Buck. So I'd love to get your thoughts on like, are there any books or publication podcasts that you urge your portfolio companies or you read to keep up to date in your space of robotics and food?
Well, I think as an angel investor, it's really critical to kind of just know what's going on out there in the world of tech. TechCrunch is a great place to go. Just go review it every 30 minutes. You don't need to read all the articles, right? But to know what kind of innovation is happening out there, because so much of what we do as an angel investor is really based on comps, and valuations are based on comps. There's no like CFing of a financial spreadsheet. But by knowing that like there are a lot of companies that are doing X, Y, Z, you start picking up an ability, which I think is really valuable as an angel investor, of pattern matching. Because like you're not going to be an expert at everything, especially an angel investor, because you don't all the time. Right. But if you can start seeing patterns of previous successful companies and applying them to whatever company you're looking at now, that can be a really easy shortcut to diligence and deal vetting.
Wonderful. I'd love to get your opinion on this. Like, everyone's talking about Web3. What does that mean to you? And like, how do you see that in your sector? Is there a correlation there, or? So
there are some things that I've just given up on. I've realized that I can only be an expert, and crypto and Web3 is not my field of expertise. However, We are prolific crowdfunders, probably the biggest crowdfunders in the world, our group. And so through Wax Invest,
Yeah.
There are some really interesting crypto tie-ins to crowdfunding. We think that there's really interesting opportunities to sell classes of companies through crypto. We think there's interesting opportunities to make secondary liquidity more applicable to crowdfunding, because one of the biggest problems of angel investing is you write a check and then like 8 years later you might have a return. So like you got to be patient. Not everything's a gift in 12 months, right? I mean, I wish.
No, I know. No, we were really looking on that one deal, but we got amazing deals still coming up. Just so out of curiosity right now, I mean, what do you think about SPACs as an exit? Do you think that's like it's died down? Like I think like year 2019, 2020, there was a year of SPACs. Everyone was trying to form a SPACs. And now you see it's not as sexy as it once was. But what do you think are the best ways of liquidity? Is it potentially just to be a secondary market on Wax? You just get in a little early and you see great companies build or becoming less public and just keeping private?
I think right now the IPO markets are closed. Like straight up, you're not going to get an IPO done. But there are a lot of really desperate SPACs out there because right now in this climate, redemptions in SPACs are like 95, 100%. Like whatever number of that they say they have in their bank account, like it's not going to be there when you need it. And then PIPEs, private investment in public entities, which you need to have to make a SPAC work. PIPEs are getting real hard to do too. So now all of a sudden, what are you dealing with? You've got a SPAC with no money. They do have a listing. They have this big overhang of all these warrants, which you should of course negotiate out. But like it is an opportunity for some companies in certain stages to go public. I think it's certainly not the heyday of what it was just a year or two ago. But now what you've got a lot of desperate SPACs because they all have a 2-year time limit, and then they kind of turn into poof, they're gone. So you've got a lot of SPACs that are willing to do seriously aggressive deals, and so that can be the right opportunity for some exits.
Absolutely. Switching gears, Buck. I mean, you've been a managing partner. You've been a GP. Like, I think everyone thinks it's just about investing, but there's the other side of running a fund and running something like Wax Invest as well. Like the amount of communication you have with your LPs, and once you get the check, then what? Like, how do you feel it's different now when you started versus now when you're on a crowdfunding site?
Yeah, I mean, I think that like my investment my relationship with my LPs is like a very personal one. It's like a highly trusted relationship. It's one that we've worked on for years, and basically it's just very personal. But with crowdfunding, and when you've got 30,000 investors like Miso Robotics does, there's a personal relationship. But honestly, you really gotta take care of your LPs because it's and be they crowdfunding or regular, because it's 10 times harder to get a new LP versus keep a existing LP happy. So communication's key.
No, absolutely. I always find it funny, I don't tell everybody this, like I haven't said it, but I'm probably like 34 LP funds I'm in, and I already know who I'm going to work with again. Like obviously you, no question. But others are just like, you just don't hear anything. And I'm like, why would I ever write another check again? Because it's not even about the returns. It's just like, I don't know what's going on. It's great one day you show me a check, hey, but it's about like having that relationship, whether it is a small little $25K check or if it's $500,000 to $1 million check. It really is. Sure. You're absolutely right. The communication part.
Yeah, I mean, I GPs ignore that at their peril.
Yeah. So right now, what are you working on next, Buck? I mean, anything, is it just best to be on Wax Invest or how are you getting the word out on everything that you're doing? Because I think people out there would love to know that you're not just looking for private investors. You're looking for a public, to have it sanity check in a sense, right? To see them wow, this is actually something that the people want, not just a closed door of investors sitting behind,
Yeah.
a desk.
Well, I spent a lot of time in Wax Invest, and launching and building new companies in the robotic space. we are going to be raising capital for Wavemaker Labs, the holdco, and we're doing that privately, not through crowdfunding. And rule number one is always get aligned with your GP. And there's no better alignment than investing in our holdco, basically. So, right now we're focused on getting that capital raised together, and then continue to build out more and more robotics companies. Because every time we build a new company in this industry, the next company gets so much easier to build because we build more technology that adds to our platform.
Absolutely. And before I let you go, I love to hear your input. Everyone talks about hey, driver, automated cars, right? And that's hard to do. I think I hope Elon does it, right, for all of us' sake. But when it comes to the inflection point for robotics in food, where do you think that inflection point will be? Where it's every McDonald's or every mom and pop might need it. Where do you think that point is?
There's going to be some really interesting market dynamics coming up over the next 7 to 8 years. I think over the next 5 years, there are going to be companies like Miso Robotics coming in and spot automating parts of the kitchen. So Miso will take out the fryer and the drink station, but there's still people working in and around the robots. So it's a robotic environment, and that's going to bring costs down and labor availability up, basically for these brands. But I think that year 5 to 7, any brand that wants to be competitive, at least competitive on price, and price does matter, especially in quick serve restaurants. Any brand that wants to be competitive is going to have to be digitally native. And what does that mean, digitally native, right? So I think kitchens are going to have to be fully autonomous. And when you make a kitchen fully autonomous, a lot of magical things happen. One, of course, it's the labor cost. Two, your real estate costs shrink dramatically because your kitchen's probably about a quarter the size because you don't have to make room for humans, right? And then also, so your real estate costs go down, but also your CapEx to build a restaurant goes down because you don't need to build a kitchen. Most of these robotic solutions are going to be kind of kitchen in a box. So I think there's a real change that's going to happen in kind of year 5 or 7, where once these digitally native quick serve restaurant or restaurant brands come online, I think if you're not digitally native and your direct competitor is selling a higher quality product for half the price, how are you going to compete? So I think there's going to be a mad rush once that starts happening. We'll see.
Yeah, wonderful. Well, thank you so much. Yeah, absolutely. I'm looking forward to it as just someone who's not just only an investor, but someone who's enjoys food. So thank you so much for being here, Buck. So if anyone wants to connect with you, where should they find you? How can they get connected?
Well, love to hear from you, and love to, if you're interested in investing, Buck at wavemaker.vc.
Okay, great. Wonderful. Well, thanks again so much. And we'll see everyone in the next episode.
Awesome. See you guys.